Good morning. I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. This is our daily market update here at TradeCaptain.com, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain and Amana Financial. This is a live webinar, hosting this from our London offices, just next to St. Paul's Cathedral, and it's something that we usually do Monday to Friday at about 9 o'clock. A lot of time. We're gonna take a look, as we always do, on the euro, which is starting to look really interesting. We're also gonna take a look at Bitcoin, gold, crude oil, and the DAX 30, and we'll probably also look a bit at other things as well. We did have New Zealand dollar data out overnight, which was good, caused the New Zealand dollar to bounce. So we're gonna take a look at that as well. Before we start, though, so always I need to stress the trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. Let's begin. Let's just take a look at the calendar. And overnight, so yesterday evening at the quarter to midnight London time, GDP from New Zealand rose by 2.8% versus 2.5% projected. This is the line. You can see how it's going to the upside and indicating slightly higher pace of growth. Now this is a solid growth. I mean, 2.8, that's good. Sometimes when it's really good, though, it's at 3.9. So from that perspective, they're recovering, but this is a good number, especially compared with other countries. So this caused the New Zealand dollar to move up a bit, and this is the way it looks like. This is a 4-hour chart. And I was actually been bearish for quite some time, and I've been selling the New Zealand dollar as well, some good trades, but not directly in the New Zealand dollar versus the USD, rather New Zealand dollar versus Swiss franc. Now what happened here is that the market was bearish up until we took out this 66.15 level, which we did yesterday by the end of the London session close. As well, you have head and shoulders here. This is the left, this is the right shoulder, and this is the head. So the difference between the head and the neckline is the target. And this, you plant this here, which is the breakout candle, or breakout level. And it does suggest this market could head to the upside. Trading this right now, though, buying here, it's probably not a good idea. I think if we do move up to the target, which is just 24 pip higher, then that will be because people are short and they just need to close out their positions. Buying here right now is not a good idea, because you move up maybe a little bit higher, 30, maybe 40 pip, but tomorrow, or maybe already today, we might decline. I think to trade this view, you probably need to put stop loss maybe at 65.86 or so. So you risk about 76 pip just to make about 40. So it's not really a good idea. So if I want to trade this, I think a little pullback and then maybe take it from there. And then we'll see what happens afterwards, because there's a lot of highs here this market needs to take out. So I'm not buying this right now. I think the small markets are more interesting, which I have shared in the technical analysis section here. You can also just click on TC orders in the bottom here, and you'll be able to see my 3 latest articles, or you just follow me on Twitter for all of my content. Now the euro is definitely looking interesting now. I wouldn't pull any triggers just yet. But we're not that far away. We're technically 52 pip or 50 pip away from this high. And I think there's going to be a good amount of buy orders and sell orders just above here. Sell orders begin with the fact that this has been a nice downtrend like this. And then, the market has been in a downtrend. It creates lower and lower and lower highs. And then this is now another high, pretty much same level. And if we take out this, then people that have been selling here, will probably be stopped out. And I think at that point, we're probably going to head up, down, and then potentially up to the May 14th high. So that is what I would focus on, and that might happen today. What is interesting is that the low today is, well, 1669. So I'm not going to put a pending order to buy here, but I'm going to observe, and then we'll see what I'll do. But we're looking at a risk of maybe 90 pip. If we head to the upside, 237 or 90. That's a 2.6 times the money. And the benefit here is that's probably going to go up, down, up, down, up, down. So it might be possible to, or should really be possible, if it behaves the way I think it's going to behave, then it should be possible to reduce stops and then buy a bit more as we can reduce the stops, and then potentially make a little bit more than 2.6 times the risk reward when and if we hit this May 14th high. Pound versus the USD is heading higher today. It's a tricky situation. It's going upwards. I mean, that's fine. But risk-reward ratio-wise, the idea was to buy down here. And if you would have done that, you would have had a nice little profit, because the idea was to profit up here. So this whole area is a profit-taking area. And people are getting squeezed. And you have Brexit news back and forward that created that volatility you saw yesterday. But it's probably not a good idea here to buy because of the risk-reward ratio. And I think that's why we haven't really moved up higher. Yesterday, we had good consumer price index figures. Well, actually, I wouldn't call them good, because it's never good when inflation is high. It's at 2.7. But the effects of the currency is that the central bank might be forced to raise interest rates earlier. And that is underpinning GBP strength. Now, gold, what's going on here? Not much. Gold is trading sideways between 1187 and 1214. It'll turn bullish at the break to the upside and bearish and move to the downside. We just need to keep an eye on this, and if the euro is heading higher, that could be a good indication really that this as well is gonna break. But we don't take a position before the break. That's what I would have done at least. Obviously, what you do at your account is up to you, but I think a break to the upside here will cause people to turn bullish. And the way the euro is behaving, I suspect this is probably gonna go upwards and not downwards. But we'll see, because the euro has not breached its high yet. Crude oil is looking really interesting. So this is the spot price in crude oil, and we're working with the big head and shoulders: head, left shoulder, right shoulder, with a break here to the neckline, potentially taking us up to something like 77.90. And then we're working with this big triangle, which actually was broken yesterday, and this target for this triangle is this high here. Now I suspect that we'll probably have a bit of a, we are having a corrective day, but potentially, because we haven't actually breached this high that I wanted to work with. Actually, we did trade above it, but looking at this right now and assuming that we don't have any positions on, then a break to the high here of yesterday could potentially trigger that move. And if that actually happens, I'm going to be short-term bullish above this level down here, which is 70.44. And the way this works is that traders would look at this and they say, okay, let's risk $1, and if we hit these targets, make $6.50. That's 6 times the risk. If we just get out at the all-time high or the yearly high, then that would be a $3.4 return, which would be still a good risk-reward ratio. So this is starting to become really interesting. The alternative, which I think is going to happen otherwise, is that we will move down a bit, but I wouldn't necessarily use this level here as the level, rather maybe yesterday's low or something like that. So I suspect that I think at the end of the day it might go down a bit, and as long as it trade above yesterday's low, I think this market should probably trade upwards and not downwards. And this is Brent crude spot market. Looks a bit different, but this is its 2018 high, and not sure what this pattern is, if it's any pattern at all. But you know, you have these two highs and this high here, and take out this high, then we could probably trade higher. So it all looks interesting. I'm not sure exactly what we're gonna target here, so probably can avoid this one. But it's interesting. If this breaks to the upside, most likely the other one is gonna break as well, which also is gonna give probably a bit of a boost to Canadian dollar pairs. Here is the S&P, and the S&P is not doing too much, but it's stuck in an ascending triangle pattern, and the actual break to this level is here. But I think people are holding off and they're just waiting for a break to the 2018 high. If we take out the high, then this market could probably head upwards. The difference between the base and the horizontal resistance line is 46 points, and a break to this level here could potentially lift the price with 46.9 points to 29.58. The Dow as well, you want to probably check that out as well. The Dow is outperforming right now, but I think the S&P will catch up. The Dow itself is a bit overbought in the short term, so it doesn't make sense to buy it right now. Rather, we need a bit of a pullback. At the same time, the NASDAQ is struggling and the Russell 2000 is struggling. German DAX moving upwards, that's fine. The Dow is upwards, S&P is very close to its all-time high, right? So something strange just goes higher. So I think this is going upwards, but I think we're gonna be limited by this level here eventually, and because of that, I'm not really that interested to trade this. Fib-wise, these are potential targets. I think we could probably extend a little bit more. What I would like to do is what I shared with you guys yesterday, and that is that I want to turn bullish, but I can't do that right now. The market is creating these. It's in a downtrend like this, and eventually maybe it goes up, and then it goes down, and then whatever that high is, we go long on the break of that high. And obviously that high right now is up here, so it's quite far away. So I think it would be natural for this price to go a little bit higher and then probably down. And then whatever that high is, the problem is I don't know if it's going to be here, wherever it's going to be, but whatever the high is, I will probably turn bullish on that break. And I think that's it. Let's take a look at Bitcoin. Bitcoin, very, very boring right now. It's been boring for quite some time. I don't really think we have too much of an edge doing anything here. When the markets don't move, there's not too much to do about it. And we just need to be flexible with our market selection. A lot of people are like married and they're like, oh, I just trade cryptos. The same way as people before would just trade euros or just trade the dollar, Forex. But obviously nowadays, like CFD brokers, they offer like commodities, stock market indices, shares, soft commodities. You can hit all the metals. And here is a dead market. There's not much happening here, so you can't really make any money on this because it doesn't move. There are other stuff you can trade, of course, but it's only or mostly going downside, going lower, it's not going upwards. So unless you're shorting, probably not making any money here. So you just need to be flexible. Get rid of the labels. A lot of people online, they say, I'm a Forex broker, or I'm a Forex trader. And the other one says like, I'm a crypto guy. I was actually in conversation with a guy a few months ago about actually producing research for Trade Captain, and he used to trade Forex, but now he only trades cryptos, and he saw that as an issue because he couldn't do both. But if you know how to trade cryptos and make money on on Forex, then crypto is extremely, well, not extremely, but it's very, very easy, because all of those breakouts we talk about, it just plays out perfectly well. Like this is a breakout, goes upwards, to give you an idea. So it usually works really well. It's just that right now when the markets are doing nothing, then we can't do nothing. And this market is having a bit of a hangover. Like in 2014, selling the euro and trading forex was easy, unless you were doing it in the wrong way. This market declined with 24%, or with 3,300. What is it here? Yeah, 3,379 pips. Because most people at the time have 200 times leverage. You know, if one didn't do 100% or so in this year, well, it's not that you had to have 200%, but it wouldn't have been impossible. It would not have been impossible to do 100% this year, just because of the decline here and how it just played out. So, but after that, you had the hangover period, and that is when the market just went sideways, and that's where we are right now with the cryptos. Okay. I don't want to bore everybody with that. Good morning, Maurizio. Good morning, hi as well. Good morning, Antonio. And good morning, Hugo and David. So I got a question. What do I think about Ripple? Let's take a look at Ripple. Last time we looked at Ripple, I think it was in a downtrend. Let's see what's going on here. So technically, we're still in a downtrend. I know we leaped much higher, but we need to take out this high. And if we take out this high, which is the 35 cents level, then we'll probably have a bit of a squeeze and the market will go like this. And then maybe I'll do something like this. But until that happens, this is a downtrend. I do know there was some news overnight. I think it was Saudi bank, I think it was, I'm not sure 100%. But that had adopted some of their features. And I'm not an expert actually on all the technology, but obviously the market rose. But Ripple, at least right now, can't operate in a vacuum. So this is Ethereum, and Ethereum for now remains in a downtrend below this high. Bitcoin Cash is also in a downtrend. So I don't think it's gonna help out. EOS, well, it's trading sideways actually. EOS on a break to this high could potentially be beginning of something. Litecoin in downtrend as well, and as a minimum needs to break this high here, but most likely needs to break this high up here at 69.49. So with most of these coins just being bearish, it's unlikely that Ripple itself is going to be able to bottom out. What you need to see is like a general market move to the upside. So here, most likely, it will stay here for a few days. And then if people understand that this is not going to go higher, I think they're going to book profits. People that bought here on this bounce, because I think at the end of the day it was a 17% move, so it's not that bad. And then they're gonna see. So I would not be long here. I would sell. Okay, I think we're gonna wrap things up, guys. Thanks so much for joining. I think most of you guys follow me on Twitter, but if you don't, my Twitter link is up here. It's twitter.com/AlexFX. My actual handle is AlexFX00. So if you're on Twitter, don't forget to check that out. It is possible to send me direct messages, and also it's also possible to send me just send me a normal message. Which reminds me, actually, hi, I think I did receive a message from you yesterday. I just didn't have time to reply to it. So let me see if I can do it now. So your question was, it looks to me that US dollar is trying to bottom out. And after the comments of the RBA, I'm looking to short the Aussie dollar, as I thought it looks to me like it's creating a bearish flag. What are your thoughts? So in the case of the Aussie, I think you're dealing with a small head and shoulders here as well. So this is the Aussie, and I know it's not like a textbook head and shoulders, but you have a head, left, right shoulder, and if we treat it like this, then we should potentially be able to trade much higher. So it projects the 145 pip move, which in essence would actually take you all the way up here. Now here, I think much like with the New Zealand dollar, I think this is gonna trade higher. So I would be bullish, if anything, maybe let it go down a bit and then maybe push up to the upside. So I wouldn't be selling here. I think this is going to continue to move to the upside, and then eventually I think it could be possible to go short. So one little trick, you know, the market is moving to the downside, right? And what we can do is just need to focus on this. So for now, this market is creating, it's in a short-term uptrend, and it's creating these higher lows, and eventually it will roll over. The problem here, of course, is that, you know, you will miss out because it's going to go down and up, and if it goes down, up, and then down is good because you'll sell on whatever the low is. But imagine if it just breaks the downside here, then, you know, you're going to give up quite a bit. However, though, the likelihood that you're actually going to make money on the move is better. Here are some past examples where the market corrected against the big picture trend and then took out support, and then here again, here's another break. Actually, I would have treated this like a horizontal level. Would have done like this. Here, sell here, and then here's another one. That's what I would have done. Okay, guys, thanks so much for joining me, and I'll see you guys tomorrow. Don't forget to like the button, or like the video by clicking on the button. Have a good day, guys, and thanks so much for everything. Bye-bye.